After that, the market tried to sink a little bit on low volume. It came back down here, but look at the volume on the week that preceded this large volume week. This volume on this week, even though the market sank pretty dramatically for the week, was on extremely low volume. All of a sudden, the next week, we had this huge uptick in volume in which the market basically just went sideways. What happened? What gave way? Now, there's two ways that you could read this. You could read this particular week as a week in which people are dumping stocks because they're afraid that, in fact, the market is going to go into a huge decline. If that was the case, if they were in fact dumping stocks, there must have been someone there to purchase those stocks because it really had a net effect of not doing any type of movement in the market at all. So if a lot of volume selling came into the market, obviously someone was there, maybe thousands of money managers were there ready to scoop up stocks at extremely low prices. And if that was the case, and it accounted for most of the volume, and there was a lot of selling by certain people who were afraid the market was going to go lower, there was an equal number of buyers ready to scoop up stocks at those prices. So it was a significant week, and these are the kind of weeks that you need to pay attention to in the market. It came at the 34 price level, and we had this huge uptick in volume for that time. Now, as we progress through time, you'll see that that actually wasn't a very large volume day at all, but you have to take it in context. In context, it was probably the largest volume day that the SPY has seen to date, and it did so after a large decline. So like I said, really analyzing the market is somewhat like being a detective. You have to take all of the factors into consideration. Let's continue. You know what happened after that. The market started to rally a little bit. We had some up and down days. In fact, we came back down again into just above the 34 level, right in here. And what happened at the volume on those days? Relatively low volume on both of those days. And the market stabilized and did not go any lower, and it did not go below our high volume day, and that's absolutely critical. We had a high volume day here in which the market did not decline below. It did not come back down below that 34 level in which we had the high volume day. Plus, we had a retest of that area successfully on 2 low volume selling days. That would have been a clue, a very good clue that the market was ready to rally. And at that point, it would have been safe to go long, purchase calls on the SPY, purchase calls on the diamonds, purchase calls on the Qs, just about anything that you wanted to go long at that point. If you had an overall sense that the market, based on these types of real-time indicators and clues that the market had run out of sellers and in fact was ready to launch into a new rally for some time, it was a significant event. So this particular high volume day should have alerted you to and given you a clue that something was going on and you needed to pay attention to it. And that's all it was really saying. Something was going on, and you needed to pay attention to it. And you needed to get out your Sherlock Holmes hat and really investigate why this particular day was, or this particular week rather, of trading was significant in the market. Now, as we go along, of course, we had a retest of this particular area, and in fact, volume started to dry up a little bit. We successfully retested it, and that would have been an excellent opportunity, especially when you saw the spike in volume the very next week in which the market went higher. We had a little bit of a low volume here, but there was no selling coming in, high volume here, and it would have been an excellent setup to go long right in this area. Now let's follow the market, because the market really did go higher. It went significantly higher by a huge percentage. And there's something else that I want you to pay very, very close attention to here, because it's an important lesson. If we go back to the left side of the chart, you can tell that a couple of different things. There's something very, very interesting going on here. One of the things that I want you to take note of is that when the market is ready to go up, when the market is ready to go into rally mode, the bars themselves, even on a weekly basis, begin to get smaller. You can tell that there was a little bit of volatility coming into this session back in March and April of 1993. Then all of a sudden, as the market started to go up a little bit, the bars started to get smaller and smaller and smaller until we hit this little bar right here. Declining range of movement in a bar gives us a clue that volatility is declining. When volatility is declining, generally it means that the market is ready to rally. This little bar right here is also a clue that in fact volatility is starting to subside and the market is ready to rally again. And that's exactly what happened. Right after that, you can see there's a continuation of smaller bars. But for the most part, it was a pretty good clue that in fact the volatility of the previous several months is over and the market is ready to rally. And it did rally all the way until here. And then all of a sudden in this area here, the bars started getting larger. But I'm looking specifically at the red bars. When the red bars start to get larger, you can tell that a little bit more volatility is starting to come into the market. But it's usually, the market does not decline on the first instance of a bit of volatility coming in. But it is a clue that volatility will probably persist at some point in the future. The market stabilized and went sideways after these two large red bars. And then the bars started getting small again. You can see they started getting small. And that was a clue that the market still had some room to move onto the upside. And then all of a sudden we had a very large red bar here. Now this large red bar introduced volatility once again into the market. And then we had a fairly significant sell-off from approximately the 36.5 level all the way down to the 30 level, 33 level. And that's a huge, actually that's over a 10% move to the downside in the market.